Welcome to the Mistake-Free Real Estate Podcast. I am your host, Marck, and I'm super excited today to be joined by a good friend of mine and our SBD insurance broker, George Reisch. George, welcome to the show, mate.
Thanks for having me, Mark.
Yeah, so everyone, George is become a great friend and a great ally of SBD. Originally, you came to us as an investor first, right, George?
Correct.
How did you hear about SBD Housing?
I was doing insurance business with someone out of Kansas City, and long story short, my sister lived out there and was telling me how much she paid in rent. Did a quick Zillow search of her neighborhood and saw you could buy a house for, somewhere around $100,000, and she was paying $1,000 a month in rent. And I thought, well, it sounds like could be a good investment opportunity in Kansas City, and talked to his name was Bill Strout with RT Specialty, and there's a couple investors from RT Specialty that work with Mark, and they hooked me up with Mark, and the rest is history. That was probably 5 years ago.
That's right. Yeah, it's been a good run. And so obviously George came to us and was investing. And back in the day, we used the local, insurance companies such as, State Farm, Shelter, Allstate, to kind of bring our individual policies together. But as SBD grew and we took on more and more clients, our portfolio grew. So George is out of California. He is a commercial a commercial insurance broker. And he and I began talking about the possibility of taking and getting a master insurance policy. So George, for those out there, tell everyone, what is a master insurance policy, and how were we able to kind of bring that to the table for the SBD investors?
Yeah, master insurance policy just more or less means, instead of having 500 different individual homeowners policies, so to speak, you'd have one policy covering all 500 rentals, whether Mark owns them or I own them or another investor. So one insurance company puts in place a master program that covers all the policies, all have their own specified limits. So no investor could say have $1 million claim and deplete the limits of another investor, right? And it goes on a reporting basis. So every single month, SBD is going to be buying new houses and possibly selling houses too. And at the end of every month, Mark and his team will go on and they'll input or report which ones they've added, which properties they've sold, and come up with a monthly premium that way. It's the same way real estate investment trusts would have their insurance done, or even a bank that would have insurance on terms of foreclosing on properties and bringing properties onto their balance sheet and properties off. So we were able to put together a similar program for SBD, mainly due to the volume, and as well as all of the houses are in specified area, so it's easy to underwrite. There's not properties in Florida and Kansas City and California, so the risk is easy for an insurance company to kind of quantify. And then they know the product too, because Mark puts out a good product. So we're not renting out houses that are falling apart. These are typically highly renovated houses with good plumbing, good roofs, good electrical, and whatnot.
Yeah, so we went with this corporate policy. So the obvious benefit was kind of threefold right off the bat. For us, it was being able to pay in arrears and account for it rather than paying in advance for all of our investors. That certainly, like George said, is a huge plus to the administration of the corporate policy, meaning that when my team, buys 10 houses in the month and then, has to turn around and get those insured, we can just, at the end of the month, we're just required to report rather than, having an emergent, hey, we bought a house today, we need to get insurance on it. In fact, to even more emphasize that point, we actually used to have to gain interior pictures of the electrical panels, and some of these smaller insurance companies were requiring that we get interior pictures and exterior pictures and all this kind of thing, which the new company obviously does not. Secondly, there was a huge cost savings. So that was a big, big benefit to all of our investors, was that, due to the culmination of risk, I guess, George, would that be the main reason that we got such a big savings right off the bat in year one was, from the insurance company just being able to pull the risk?
Correct. Yeah, I mean, typically, like anything in life, the more money you spend on one thing, the better price you can get. So that was one reason the premiums were significantly cheaper several years ago.
Yeah. So, obviously, as in anything, insurance rates, I'd say they could go up and down. They say they can go down. They don't typically mean to do so. But no, they have gone up, annually with small little increments. But by and large, we're still getting it way cheaper than what we could on an individual policy, as George said, because there's so much volume that we're, now at 560 doors. So that massive amount of insurance is kind of gets that group discount. And lastly, I think it's a better coverage all in all. We get, there are certain benefits. George, how would you say the insurance is better in your mind? I know there's like breed limitations on other policies, but in general, I feel the coverage is considerably better. Would you agree?
Yeah, I mean, if you look at the policy, there's no exclusions for things that might be out of an owner's control. Like Mark brought up, dog breeds. So any homeowner's policy, even my house here and any investor's house, Mark's house, you could have a breed limitation for pit bulls, Rottweilers, Dalmatians. There's several dogs, and we don't know. A tenant might tell us, "Hey, I don't have a dog," and the next thing you know, there's a dog on the property, and someone's attacked. And if you had a policy that had a breed limitation, you could be in a lot of trouble getting defense. So it's the main things, right? We buy insurance. We want insurance to cover the property itself, building, sometimes contents, loss of rents. But then the main thing, the biggest claims are liability claims, casualty claims, bodily injury, property damage that's caused. So the biggest thing that it does, it simplifies the process that an individual investor can be pretty much assured that there's not going to be an exclusion that is going to put them in a place where they wouldn't have coverage for an event like a dog breed attack or something like that.
So better coverage, for sure, and we've been thrilled with it. What about the claims process? We've had a couple of claims over the years now, George, and for clarity, I think it's been 4 or 5 years that we've now had this policy in place?
I think it's 4 years. I think the first year was really bad, right? Meaning,
Yep.
not bad. There was maybe 17 claims, but that was a year where there was major rain in Kansas City, major hail claims. I think there was 2 fire losses that year. And look, at the end of it, Great American has stayed with SBD, which is good, right? So they didn't cancel anybody. And the other thing, there was no complaints from SBD or any of the investors that own the houses of, hey, we got the short end of the stick on that claim. We didn't get enough money to rebuild. We didn't get enough money for this. You didn't defend me on this bodily injury claim. So the best thing in insurance sometimes is when there are claims that you don't hear much about them, meaning it went smooth, no complaints. And so I think that's, and since then there hasn't been much activity. So SBD wasn't a management thing on having the claims. It was a weather issues, and every now and again you're going to have a disgruntled tenant. It just happens.
Yeah, no, first year was really put Great American under the fire because, as you said, there were some claims. That's what insurance is there for. I think also people got excited about such a lower deductible than we had with the other. There were a few more claims for just minor hail damage, even repairing roofs. But I think we ironed those out. And yeah, I think, now it's been pretty clean slate. You would know better than I, but I believe there's only been, a couple of insurance claims per year since then.
Correct. Yeah.
So, we've been thrilled with obviously the policy coverage. We have been represented, a lot of times on insurance. The complaint, if you're shopping it around, the complaint is always like, oh, well, it may be cheaper and it may look better on paper, but you wait till you have a claim and then it's not going to be as good. And that certainly has not been the case with us. It's been, lawyers have just been very easy to work with. They were we had a couple of just those frivolous claims, and they didn't just rush to settle. They would actually challenge them in court, and we got a couple of those to go away rather than actually settling when they were just silliness. So all the things that investors don't really need to normally worry about. Being a turnkey operation, we handle everything for the investor, but I certainly know that our team here at SBD has appreciated the lengths that Great American and your team, George, has really gone to protect us.
Yeah, no, exactly.
George, talk a little bit about the limitation of risk. What do you look for when you're an investor here, which obviously gives you a unique perspective. What are you wanting out of an insurance company to protect your assets here in Kansas City?
I mean, you just want someone to pay claims fairly. If there's a claim, I mean, there's always going to be things that insurance doesn't cover. Like one of the questions that Mark's had for me and most businesses are with COVID, what if someone doesn't pay rent? Is there coverage on the policy? And the answer is there's not, because there's no property damage. So you want to have an insurance company pay claims, pay them fair if you do have a property damage claim. You want them to be fair to the owner and to the tenant who may make a claim, as well as a third party that might be injured. I know we had a claim for a tenant this past maybe year or two where a tree fell on their car, and Mark's going to know this claim, and they wanted to get a brand new car, but they owed more for the car than what the car was worth, and that's what their own insurance company told them. So then they came to us, and long story short, at the end of it, it turns out they tried to make a claim against their own carrier and SBD's policy for the car and essentially double dip, and Great American saw that and didn't pay. So you want an insurance company to pay claims they need to pay and not pay claims they don't need to pay. And that ultimately keeps the cost down and keeps everything fair. But, for me, I was telling Mark the other day, the biggest thing for the master policy is there's automatic coverage, which means since Mark said in the beginning, you report in the arrears. If Mark buys a property on September 8th today, at the end of the month, he's going to report that. So on September 9th, if the property burns to the ground, there's automatic coverage. We don't need to make sure that, like how Mark said, to go get interior pictures and do this and do that, or just forget to bind the insurance because you bought a house and there's so much going on that you forgot to go call State Farm or Allstate or Farmers or whoever and buy a policy on the 8th and something happens on the 9th. There's that risk too. We don't have that risk now. So for me, the simplified process for everybody keeps my risk low as an investor from someone just forgetting to do something that they normally would never forget to do.
Yeah, that's huge. One of the things that our investors often ask, George, is talking about the amount of coverage. And I know we had a call on this recently where they were wanting to know, well, the property, Mark sold it to me for 150, but I think it might be worth 170. And then my mortgage on it is for 125. So do I insure it for the 125, the 150, or the 170?
I mean, you should insure it for as much as you think you need, right? Someone would say, but you don't want to over-insure because no one's going to pay you more than it costs a house to rebuild. So
if they wanted to insure it for 300,000, they're not going to get a check for 300,000 on the back end. Is that what you're saying?
Correct. I mean, we've talked about before, and I've told so many clients, if you over-insure something, the reason they won't give you that limit is everybody would be incentivized to over-insure their property and then just burn it to the ground. So like my house here is maybe worth, say, $1 million. I could go insure it for $5 million, and then the property catches fire randomly the next day, and I profit $4 million, right? So that's why insurance companies won't do that. The way we came up with the limit for SBD originally, I think we've done it along the way, is we look at the size of the house and then we use an average cost of square foot to rebuild. So it's that number could change, depending on, cost of lumber, cost of labor, money's so cheap right now that things cost maybe more, or inflation could be yet to come. So those numbers could change, but I think we use $100 per square foot to rebuild. And that for Kansas City should be sufficient, but each property is different. If it has a finished basement, maybe it costs more. If I mean, there's a million factors that could come into play, but that's the way we came up with the valuation.
Sure. No, and that's something that SBD always looks at on an ongoing basis. And what I say that, an annual basis, to look at how we are insuring and to make sure that our investors have enough coverage. But the onus is on the investor at the end of the day. Look, if they feel like they want to insure it for 170 instead of 145, then they have the right to do that. Because as George mentioned, every policy, although there is one insurance premium that SBD pays on behalf of everybody, it is broken down and then individually billed to our investor clients, and then paid on their behalf. Again, this is a turnkey operation, so everything is done on behalf of the investor. So we make the payment and then just distribute it across all the individual policies based on how much coverage they have. George, there's a general liability portion of it as well. Can you talk a little bit about the general liability and then, insuring in the name of an LLC? Do they have, if they were individually named in a lawsuit because someone found out that they were the owner of the asset, that would be covered as well?
Yeah, so the general liability is going to cover bodily injury and property damage that may happen. So like I mentioned the tree limb falling, that caused property damage. Bodily injury could be a tenant. There was a claim that a woman fell off the front of the stairs and was injured. So that'd be bodily injury. So in terms of the coverage, that's what it's going to cover. And in terms of the individual insured, you could own the house as, like, I own my house as an LLC. So if my LLC was named in a lawsuit along with SBD Housing and they named me personally because I'm the managing member of the LLC, in any insuring agreement, typically the LLC, the individual owners of that LLC would be covered under the same, under the policy if they were named in the lawsuit as well. So it would provide defense for me as a member, for my LLC, for probably Marck, for anybody else that's on this policy that would have policy holder rights.
I often did ask George about the need for an umbrella policy. Can you explain to people what an umbrella policy is? Because I think there's a misconception that it somehow gives you greater coverage, like you suddenly get better coverage, when really I think all it does is increase the amount of the coverage limits. Isn't that correct?
99% of the time, the umbrella coverage is follow form, which means it's going to follow the exact policy language that it sits over. So in this case, it would be over this Great American policy through SBD. But I have seen cases where the umbrella can provide different coverage. It just doesn't happen very often. So what an umbrella would do, and I have my policies under my personal umbrella. So I have a personal umbrella with personalumbrella.com. Sounds like I'm just going online and buying it, but it's through a homeowner's insurance broker, and effectively it gives me a limit greater than what would be provided under this. So under SBD's policy, you have $1 million per occurrence limit for liability. If you have an umbrella, you would exhaust. So let's say there was a claim where, I don't know, the entire family was inside of a house and there was a carbon monoxide came and killed everybody. You could have a claim that went over $1 million, right? So the umbrella, as soon as this limit on Great American is exhausted down to zero, then the umbrella is going to kick in. So it gives the investor or the owner a greater layer of protection to know I've got more than $1 million per claim. You could buy an umbrella for another $1 million, 2, 3, 4, 5, 10, all the way up to whatever you want to spend on. But I am a huge proponent of any investor that has these. If you have rental properties, you probably have some money. And if you have some money and something happens, someone will come and try to take it from you. So I think everybody should have an umbrella. And in the event of a serious claim, $1 million just, it's not going to be enough money. And it's not very expensive to get a personal umbrella to go over these. It's I forget what I pay, but it's it's not even close to what SBD charges me for the first million. It gets cheaper as you go up because there's a less chance of it happening. But if it does happen, you want to make sure that you have enough limit.
No, I appreciate that. That's sage advice, and something we'd always encourage. And it doesn't need to be crazy. We've never seen, on the record, we've never seen a claim greater than that one firehouse that I think the total claim was around $170,000 to completely rebuild that house. And that was a $250,000 house. But outside of that, we haven't had anything remotely close. But the reason we have insurance is to it's like a nice warm blanket, right? You just want to know that everything's going to be okay should the worst case scenario happen. And so to have an umbrella policy is, yeah, for sure a valuable tip there.
One point, Mark, the umbrella only sits over the liability, not the property. Meaning the building's insured for 200,000 and the building burns down and it turns out it's worth 300,000 to rebuild. That $100,000 gap there, the umbrella doesn't cover. That's only over the liability portion. So, which would be a third party claim. So property damage is first party, meaning I own the house and my house is damaged because of a fire. That's one part. And then on the same claim, well, the house was damaged in the fire and the tenant was in the house at the time of the fire and suffered, third-degree burns. So now he's suing the property manager, the owner, because of their negligence. That's where it would be covered on the liability portion too. So you could have a claim for both property and liability on the same exact claim.
Interesting. So, George, we talked about the SBD being the property management company and obviously having a vested interest in these properties. I feel like, and I want to get your thoughts on this, but to prove general liability, again, you and I are not lawyers and we're not playing them on TV, but, there's still, for a general liability to be proven, there has to be some kind of gross negligence. And I believe that, having a third-party property management company, such as SBD representing you, certainly gives the investors another layer of risk aversion, knowing that, if you are grossly negligent, we bought the asset, we rehabbed it, we sold it to the investor's never even been there, and now we're property managing it. SBD is firmly, in the crosshairs of any lawsuit compared to the investor. Would you not agree?
Correct.
So, that I know gives a lot of investors thinking, man, I have this property and I'm very liable. My argument would be, look, we are absolutely on the line here, and our property management team, takes these calls from the tenants so seriously, because that's the biggest negligence claim. And my perspective would be, hey, a tenant calls up, I smell gas. And instead of saying, get out of the building and call 911, they're like, oh, don't worry about it. It's probably nothing, And so having a professional property management team is the greatest hedge against any risk, in my opinion, rather than trying to self-manage. Can you imagine trying to self-manage your properties from California?
No, it'd be the stupidest decision on earth.
Yeah. So, no, insurance is definitely there. Man, it's been a good discussion. What other things, can you add to as far as, the insurance equation here? Is there anything we've missed out?
I think we've covered most.
Give you the final word.
No, I think the biggest thing is simplify. So if I'm an investor and I own properties with someone, especially in a state that I don't reside in, I don't want it to be a full-time management job. So on the insurance side, it's just the simplified process of SBD having this master program. I think it reduces my risk of an investor of SBD making a mistake on buying an individual policy or not buying it or doing it wrong. And it enables all of us to benefit from that simplified process.
Sure. One other thing that just came to mind also, we should probably dispel the myth that somehow, you or I are getting rich off this insurance policy. For clarification, you pay the exact same rate as everybody else, correct?
Correct.
Yeah. So as do I, as a property manager myself. So yeah, look, the intent here was to really drive value to our investor clientele. This is not a money grab or some kind of scheme. We're delivered a policy that is now way more investor friendly. It's administratively friendly to us here at SBD, meaning how we can report the reporting of it, and quite frankly, way better insurance than we had previously. So, hey,
Yep.
George, thanks so much for your time today. It's been enlightening, and I know this will go a long way to kind of helping people understand what is a master insurance policy and how it helps them as investors. Thanks for your time. Appreciate it.
Thanks, Mark.
You're listening to Mistake-Free Real Estate Radio, the authority in passive real estate investing. No late-night calls, no clogged drains, no tenant nightmares. Take the passive investor's approach to real estate investing and trust a turnkey professional. Learn more at mistakefreerealestate.com. Until next time, remember, you don't get rich from what you earn, you get rich from what you own.